So Americans are officially running out of money. We are seeing prices continue to go up. At the same time, our wages are not keeping up with inflation. This is a problem. But it's because of our previous spending. That's where Americans are actually struggling with our payments. These are for credit cards, cars, home loans, and so many other things. Today I want to break down what's going on at this time, what you are likely experiencing, but you may not realize it just yet. So again, I'm going to break all this down in just a moment, but before I do, all I ask is one thing. Takes 2 seconds. Go ahead, hit that like button if you enjoy these daily updates, and now let's begin. We hear every single day from federal officials that the American people are doing just fine. Savings accounts are doing well, right? Credit cards aren't maxed out, but yet we have the highest credit card debt we've ever had in our history. Why? Well, I want to break something down for you. Let's look at the past handful of years, 2, 3, 4, 5 years. What have we seen over that time frame? Well, we've seen additional borrowing. Borrowing was fairly inexpensive back in 2020, 2021. Then it started getting a little bit more expensive. People continued to borrow. This is on credit. This is on borrowing for a vehicle, borrowing to buy a house. I've been talking to many people just over the past few weeks that are considering buying a house right now with interest rates where they're at, with home prices where they're at. And I'm telling them, hey, you might want to slow down. This might not be the best time to purchase a home. But listen to this. Auto loans. Auto loans, the report just recently, as of yesterday, is that 6.6 of vehicle owners with subprime loans are at least 60 days past due. Now, somebody commented and told me this. This person says, and I quote, "We used to wait until 90 days of no payments to repossess vehicles, but lowered it to just 75 days. This allows for a handful of days to locate said vehicle and possibly work with the borrower before we take it back by 90 days. Sometimes just the illusion that a person is losing their vehicle gives them motivation to make a payment. At the end of the day, we are a bank and we don't want to deal with vehicles." Yeah. Banks right now are starting to up the pressure on borrowers. Whether it's a credit card, a home loan, a car loan, they're putting pressure on the borrowers. I have a friend of mine who received a letter from his bank on day 33. So he missed a payment on his car. Okay? He just missed it. Now, could he afford it? Yes, no big deal. But he missed a payment by day 33. He got a letter in the mail, which means that he missed a payment on day 30, which they would have sent the letter day 31, and it showed up 2 days later on day 33. That's how quick they are. Hey, you missed a payment. Don't forget, right? The American people are running out of money. Banks know this, okay? Your lender knows this, that the American people don't have a boatload of money. We don't have an endless supply of money. As a result, they are now contacting us quicker, sooner, because they know if all the other lenders realize that they're going after just the minimum amount of money that a person has, they want to be first in line. They want to be first in line to ensure that they receive their payment. Everyone else, screw you. That's what they're telling us. But listen to this, okay? It says Americans are finding it harder and harder to pay off their debt. Americans continue to increase the amount of debt that we have. We are seeing credit cards are getting maxed out. Credit cards, just to show you, okay? Look at this. It says Americans' credit card and household debt reach all-time highs. But according to the New York Fed, says that despite debt rising to new highs, American consumers are managing it relatively well. Based off what I've heard from many bankers, many friends of mine, no, the American people aren't managing it well. What they're doing is they're selling off assets. They're selling off vehicles that, again, were paid off. They're selling them so that they can afford to keep the vehicle that still has a loan on it. The American people are selling tools which they need in order to do their job. Okay? What we've seen recently is people are selling stuff that they either need or maybe they don't need. And they're just getting rid of it because they need the money more. I want to show you this. Here's a real problem. Paycheck to paycheck nation. 59% of Americans wouldn't cover a $1,000 expense with savings. The majority of Americans do not have $1,000 in their savings account. But here's something that's even more worrisome. Many Americans couldn't even afford a $400 emergency. They don't even have the ability to put it on a credit card because they don't have enough of a balance, or their balance is too high. They don't have enough. Okay? That's a huge issue. But look at this one. I thought this one was very interesting. This was from a few months back, but it says more families making over $150,000 are living paycheck to paycheck. According to the report, 30% of U.S. households that make over $150,000 per year are living paycheck to paycheck. That's scary. Because guess what? The making $100,000 isn't what it used to be. If you made $100,000 back in the 2000s, you were doing fairly well. You made it back in the 1990s, you made $100,000, the home that you could get could be insane. But now $100,000 doesn't get you as far. It just doesn't. When a new car, just an average new car, costs over $40,000. A home costs over $400,000. Yeah, this is why Americans are running out of money. Number one, our wages are not keeping up with inflation. That's a huge problem. Number two, prices on everything are going up. Again, inflation. And number three, and this is a big one, we don't know how to save. We continue to borrow. We continue to spend. But when you look at all these stores that are going out of business, I talked about this just the other day, Forever 21 going out of business. Forever 21 sells very inexpensive clothing. How could a retailer that sells very inexpensive clothing be going out of business? Shouldn't they have a bunch of people coming in? Well, yes and no. It's still expensive. It's a luxury to buy new clothes. But at the same time, when they're selling for $7 to $15, it's not much. But again, many Americans, that's what they make in an hour, between $7 and $15. That's what's scary. So at this time, what you need to keep in mind is that Americans are officially running out of money. Think about this, because you may be in the same position where, yeah, you have a nice car, costs you $450 a month, that's your loan, and then you got to pay $150 a month for insurance, and then you have fuel and maintenance, and that adds up a little bit, maybe an extra $100 a month there. So you got $450, $150, that's what, $600, another $100, there's $700 just for a vehicle to get you back and forth from work. That's it. So keep this in mind. As more and more Americans realize they've run out of money a long time ago, they're going to stop spending. They're not going to take that lavish vacation. They're not going to buy new clothes. They're not going to upgrade their car. They're not going to renovate their home. So other stores like, Walmart, they're not going to buy, sporting goods there, or Dick's Sporting Goods. They're not going to go to their mall and buy stuff there. Macy's is going to get hit. You're going to see more Macy's stores close. As far as renovations, Home Depot and Lowe's have already said it, that they see this year as a very tough year. So just be prepared. As we see Americans realize they don't have any money, they will stop spending. Your lives will change. So just want to share that with you, but that is what we know as of today. So again, thank you guys for watching. Consider subscribing, and I'll see you guys on the next one.